What's going on YouTube? George Saber here of Observatory. And if you guys aren't familiar with my publications and the way I trade market cycles and what we do, I've got, some of the predictions that I've made in the past. I predicted that gold would go on a bull run, cats out of the golden bag. This was in May 16, 2019, before it actually broke out. And before it broke that range, it was still below the 5-year range high, and then boom, gold broke out just a couple of months later. I've also predicted that, the Bitcoin top back in 2019 at 13K. I said it was losing steam in July. Also, I've predicted the bull run on Bitcoin March 31st, 2019, 2 short days before the massive candle, right? I said we were going to at least 4,700, and all my analysis is in that paper, right? And I did say another market edge theory that we're not willing to disclose at the moment has our bullish Bitcoin target of 4,700. This is the most important part. More importantly, 4 p.m. CST today and this coming week could mark new beginnings for the cryptocurrency market, right? And going back to Bitcoin and back to what happened then, and what just 2 days later, we saw the first mega candle right around April 2nd, right? So the 31st was just right here, 2 days before the breakout, right? So today I'm seeing something in the market that I also published about back in December of 2019, right? I published a paper about the correlations between the stock market and Bitcoin and when things enter a bull run. I was also saying in that paper that this rally back in December 2019 was very much speculative because it lacked a fib retest. And I called for a savage correction on a weekly scale. Let me go ahead and try to find that savage form. A 1.6 for retested in savage form. Shaking out leverage bulls, trapping bears before the index took off. Liquidity extremes were tested. The current move comes without a retest, which makes this rally still speculative in nature. So before COVID happened, as indices, stocks, everything was blowing off in December last year. Let's go to SPX. I'll show you guys how I chart these things. Let's go to the weekly. As everything was blowing off, going to new all-time highs in 2017, I said, hey guys, or 2019, I said, be cautious as savage correction is coming. And the reason being was because technically the chart lacked the fib retest, right? We hadn't retested this level, not on a weekly basis, not properly. If we look at all other extensions before going up higher, 1381 was retested savagely, right? 1572 was retested savagely. Even here, before breaking out of this range, before breaking above 2000 on the SPX, it was retested savagely more than once, okay? So this rally that happened just before COVID crash, as we were going up in December, crash happened in like February, right? 2 months before the crash, I predicted a big savage correction. Now, if we add some more fibs to this chart, we get our perfect entry during the crash, right? Which was also a fib retest, right? I'm a big time fib trader, probably one of the most efficient fib traders you haven't met, unless you're trading with us. And that kind of set us off in this extended run. Now, why is this relevant? Why am I bringing this up? Well, because what I'm seeing right now on Bitcoin is that it is actually ready to move up higher, right? It's ready to move up higher. Why do I say that? Well, back in 2019, I predicted the top on Bitcoin just using fibs, right? Using the 61.8 retracement. All that rally was, all that Bitcoin bull run from 3,000 to 13K, it was just a bearish retracement. Well, how would you say that? Because everything's a bearish retracement. Any kind of rally upward is a bearish retracement until it breaks above the 61.8. And that's when we can presume that the asset is going to extend, just like when you buy the 61.8 dip. I can go into more details about fibs, but it would make this video a really long one. What's going on today is Bitcoin's actually moving on up with a lot more steam, right? A lot more legs, a lot more reason to get above that 61.8 retracement level. And I believe we're actually closing above. This is BLX. It's the index, but if you go to like BTC USD in real time, I know weekend price action is kind of flimsy. It doesn't have a lot of legs. We get CME gaps and such. But the important part is Bitcoin's entering a risk-on environment. It is likely headed up to knock out some extension targets, right? Look at this buying volume. This looks sweet. It's a sweet setup. Back to my correlations paper, right? The risk-on greed cycles. Whenever this happens, when Bitcoin breaks out of a range or enters a risk-on environment, so does the S&P. When Bitcoin broke from $15 to 200, the S&P broke out. It cleared the 7086 and went up to the 1 fib level. Can kind of, as you guys can see this a little bit better, right? So Bitcoin broke out here. The S&P took out these fibs, went up, rose to the next one. And this happened every single time, right? The 1.4 to the 1.6 was a corrective phase. And both these assets actually corrected at the same time. You can see the S&P entering a corrective phase from July 2014 all the way to July 2015. Bitcoin literally did the same thing. Now, the corrections don't look the same, but in terms of when the market entered one, right, and when it broke out and got out of one, everything lines up. And CNBC is going to tell you they're not correlated. Bloomberg's going to tell you they're not correlated. Those guys don't, fuck those guys. Excuse my French. Coming out of that correction, we move forward. And where's my kissing the moon part? This chart right here. Back when Bitcoin broke out in 2016, November 2016, and entered these extending highs, what did the stock market do? November 2016, it retested. Back to my retest theory in the beginning of this video. It retested the 1.44 and went all the way up to the next extension. Now, looking at these charts now in real time, Bitcoin trying to close above 13.5 with a lot of juice. Let's look at the S&P. Are we lacking any retests? I don't see any significant retests that are lacking. If anything, this high that I had called speculative, I'm just going to clean up this chart a little bit. This high right here that I called speculative last December and asked for a retest at least 32, right? That got knocked out. Retested it. Actually, no, this fib I wasn't even using in December. It's kind of cleared this one out. Okay. In December, my theory was we at least come into 3,047 on the SPX. Now we add the extension of the next range and everything looks complete. In my opinion, markets are actually ready to knock out new highs. Totally. Right? And let me kind of go to the SPY chart. Kind of had this one annotated. And we got the December rally. Sold off because it was speculative. COVID dip happened. 223 gets retested. Market gets sent again. Where are we finding support? We're finding support off this next range extension. And this range extension is actually this one here of this last consolidation period before entering the extended run, right? So hypothetically, we could be consolidating and finding support at 325, which should move us back to 340. And a close above 340 is just going to send markets to new highs. Now we're seeing all this fear mongering. Oh, COVID's coming back. Oh, uncertainty in the market. Everything sold off on positive earnings last week, which doesn't make a whole lot of sense to me. And I think this is considerably a really good shakeout, right? Last week was a good shakeout. And if you go to the SPYs, just put SPX, back to the November election, right? This low right here in October. What was that, November? Oh, this is the weekly. That's why. That was the right dip. That was the shakeout just before the election, right? The week before the election, we had a major sell-off that turned around November 2nd, right? 2016. November 4th, 2016, volume came back into the market and the market got sent to new highs. Okay, so a lot of parallels are happening between now and 2016. And the reason I like covering such things is because if we do enter an extension from 325 to, let's say, speculatively 373, the first target, or 390 or 396, trading that how I'm trading it right now is going to make me quite a bit of money. Now, last time I traded a risk-on cycle, it was June through September. And I did a small account challenge. I took it from $591 to 38,000. I actually went all the way up to 60K, but that was later in September as we entered the blow off. And this was, July, August, September, 3 months, right? So what I'm seeing is going to happen in the market is we're entering a risk-on environment. I'm not too worried about COVID. I did catch up with a infectious disease physician of mine in New York that's actually working a COVID floor, right? And this was yesterday, and I said, hey, what are you seeing? She goes, we haven't had a big surge again, but we are expecting an increase in numbers soon. I don't think it will be as bad as March. So why is she saying that? In March, people had no idea. People were going, hanging out, doing all kinds of things, not wearing masks, not even worried about COVID. So New York got hit really, really hard. And now we have a little bit more awareness, right? We know about COVID. We know it's real. We know it's not a hoax. People are kind of prepared for it. She said, treatment is the same. Now we know a lot of things actually don't work. Going further into that, she said hydroxychloroquine, azithromycin doesn't work. That was the standard treatment, right? That's why people were dying. Now we know it's just a hunk of crap. It's not a good treatment. She said remdesivir doesn't work but helps a little. She said steroids help inflammation in the hospitalized. Things that she knows as an infectious disease doctor working the COVID floor in New York. We're a lot more prepared for this now. She said the antibodies are being studied. Data looks okay, so we will see. Vaccines sound good so far, probably coming out in December, right? She's not a CDC person. She's not an FDA person. She is my friend who is a physician working the COVID floor. So hopefully vaccines will be 60% effective. This is what's being said. I think we'll have a very rough winter overall, another 3 months at least. But so, that aside, brushing that aside, the technicals to me look pretty strong, right? Some are saying, oh, it's that megaphone formation. This is a broadening top. It's coming down. We're going double dip recession. Based on what I'm seeing from correlations in the markets, right, I'm not too worried about this. I'm really not. I do think that we're going to enter a risk-on environment, especially if BTC is leading this time. And it looks like it is. That's all I've got for now. If you like this video, my analysis, smash that like button. If you don't like it, drop me a comment. Tell me why I'm wrong. And if you want to join us, get my daily input, click the link in the video description, hop into Discord. And that's all I got, guys. Trade safe. Hopefully I'm right. Hopefully we get to make a nice hunk of change on this one. I'm looking forward to the next couple of months trading. I'm looking forward to next week. There's going to be the central Fed's meeting on Wednesday, announcement coming out on Thursday. New president going to be announced, right? A lot of changes, and that's kind of what's causing this volatility. But I think it's just volatility. I don't think we're gonna get wrecked just yet. So hope you guys enjoyed the video. Once again, smash that like button, share it, subscribe to the channel, join Discord, and that's how you get what we've got to say. Enjoy your week.